Now, the Central Bank of Nigeria has reintroduced the PMI and Business Expectations Survey after suspending it years ago. And for the month of July, the survey points to an expectation for business conditions to improve, with much of the optimism being led by the agriculture sector. Ridle Markus, who's Sub-Saharan African macroeconomist at Absa CIB, joins us with greater perspective on this morale. Ridle, a pleasure. Good afternoon.
Good afternoon.
All right, Ridle, maybe we can start off by reflecting on the suspension of this data and the reintroduction of it, and what it does tell us about the state of affairs in Nigeria, and even, the willingness by government to start bringing confidence to markets about the state of the country.
Yeah, look, I think for many years we did see these, releases being pushed into the market, and it did provide additional transparency as to what's going on in the economy, etc. But I think for the last 3 or 4 years, we didn't see that. And under Governor Cardoso, he obviously decided that, it's a good time to bring in a new approach and also make sure that the market's confidence returns into the central bank, and that we've got much more data available in order to assess the state of the economy. So I think it's a very positive indication. There's a lot of change happening at the central bank. We know that Cardoso did indicate previously that he wants to do proper house cleaning at the central bank. But it's really positive. So far, we've seen, as far as I know, we've seen 2 releases. You mentioned it, the Business Expectations Report, and we've seen the PMI. And I think the Inflation Expectations Report will also be released soon. And that will just provide further insight into the economy. And as you already know, the economic conditions in Nigeria are rather challenging at this point in time because of the high living costs and the increased number of unemployment and poverty and other challenges, so-called, let's call it multifaceted challenges that the country is experiencing. So every bit of data will really help, and it will help monetary policy authorities to make a better, not just assessment of the economy, where it is, but also what to do next. So the more data they can get, the better for policy purposes.
Let's talk now about, these 2 prints that have emerged here. It's both PMI and the July Business Expectations Survey. Ridle, just help us take a stock of what we've seen here and what it exactly means for the economy then.
Well, the Business Expectations Report has clearly shown that, there are still some challenges in the economy. We've seen that despite the optimism from the agriculture sector, that there are concerns around insecurity, there's concerns around the Naira, and an expectation that over the next say up to 3-month period, the Naira might weaken further, although there's some more positive outlook on the Naira 6 months out. And I think it's probably not too different from the general expectations in the market that the currency is under pressure, that we know that, at this point in time, there's a big focus on rebuilding reserves, for example. But I think all of us hope, and so does the central bank, that the Naira over the longer term will start to, medium to longer term, will start to stabilize and also help push inflation lower. The PMI or business, that also shows the private sector businesses are certainly under pressure. A whole lot of sectors, I think there is no, shall I call it, uncertainty around that. We did see the PMI, even the S&P global PMI dipping below 50. So it is a tricky point in the economy in Nigeria. You've got rising inflation, you've got higher policy rates, you've got the insecurity, you've got fuel shortages that continue, acute electricity shortages. So it is, the country is struggling at the moment, despite the reforms that's being introduced.
What is interesting here, right, is I think we've spoken about this before, is the fact that the general understanding here in Nigeria is that the current conditions are nothing but a phase, on the way to somewhere better. I'm wondering if, markets are the economy is taking stock of the fact that even though things are really tough at this point, there is an expectation that, things will get better, and that could be evident in the PMI or the Business Expectations Survey.
Yeah, I think, these indicators are what we call the high frequency indicators. They come out, or they're meant to be coming out more regularly. However, if you take a longer term approach, you do realize a couple of things have happened. There are still reforms that need to be done, but the country or the government has gone a long way in implementing a whole lot of reforms since they came to power just over a year ago. And I think ultimately the idea is for President Tinubu to put this economy in a much more sustainable growth path, We're hoping that the oil sectors continues to improve. We already saw oil production now, it's around 1.4 million barrels, but certainly from a year ago, it is certainly better. A lot of work that needs to be done all over the economy. And we hope that, that in a year or two's time, that we're going to see the benefits of that work. Certainly, FX reforms have been top of mind. Currency has fallen sharply, probably 70% down from a year ago. And it's obviously driven inflation. But on the upside, we've just seen inflation dipping below 34%. It came in at 33.4% from over 34% in June. So there are still some, there's evidence coming through that things might be about to turn. The latest rate move by the central bank was also very small. It was a 50 basis point hike. And I think there's evidence coming through that more and more people are starting to think that from here on, they will keep the policy rate unchanged. So I think as we move into 2025, there is going to be a lot more indicators that the economy is pushing in the right direction and compared to the challenges that we've seen so far.
Also interesting to find out here maybe is where Nigeria is with oil production and whether this has come out in any of these surveys. We know that, this could certainly be a better sector in the country, but we also know that there's been very positive developments. There's some refineries opening up, Nigeria really trying to take hold of security issues there, looking at theft and vandalism. Is that starting to bear fruits, and are markets also starting to see that bearing fruit?
I think one needs to be realistic that while there has been some improvements in insecurity around the oil-producing area in the south of the country, that while the first quarter numbers were really exciting and much higher than a year before, the second quarter numbers were slightly down, probably 4% down from the previous quarter. And that just shows you how volatile oil production can be, technical issues, operational issues, increased oil theft and vandalism, as you already mentioned. But I think what's important here is to realize that the broader trend is upwards. There is a strong commitment from the federal government and President Tinubu's administration to improve oil production. And they're targeting production of probably around 2 million barrels within a year's time. And while they might find it difficult to get there, given all these challenges, I think it's important that they set an objective and work towards that objective. Oil sector, as you said, is a critical sector in Nigeria. It still dominates exports, so they really need to fix it. Of course, they've got the Dangote refinery as well now. They promised to produce petrol by next month. That could eventually be positive for the currency as well. So there's a whole lot of developments in Nigeria, I think, that makes you believe that at least over the medium to longer term, things will be getting better and they are moving in the right direction. And that the period of the multifaceted challenges that we've seen, that they will probably be in a better space to address those. So a lot of work that needs to get done still, but I think that they're doing a reasonable job so far.
We also see the business expectation survey there saying that they expect that there'd be more job opportunities here, Ridle. Do we know where those jobs would come from? We know in South Africa, we expect jobs all the time, but they don't quite emerge the way that we hope or plan or think.
So, I mean, it is difficult to know exactly where it comes from, but I think many of the sectors do believe that, with an expectation of lower inflation and living costs coming down a little bit, that demand will start to increase, new orders will increase, and that creates an opportunity for new jobs, etc. So there's certainly a more upbeat outlook. And especially in the services sector, I think that there's an opportunity in the services sector to really start producing more once demand picks up. So, I'm not quite sure whether there's any specific sector that stands out in terms of job creation, despite what the survey says. I think that, it's a comprehensive approach that needs to be followed here to ensure that the development agenda continues and that they continue to invest in this economy. There's just so many areas in this economy that needs attention, and I think it's the right approach to be positive. It's not going to be a smooth recovery and rebound, but the eventual hope is, of course, that it will create jobs across the different sectors in the economy.
All right, that sounds like execution risk is high, but some optimism nonetheless. Thank you so much for your time. Always a pleasure having you on Business Lunch. That was Sub-Saharan African macroeconomist at Absa CIB, Ridle Markus.